Hello guys, welcome back to another video. It's 5th of February 2021. Welcome back to another learning video. So today we had the RBI monetary policy which was held at 10 a.m. in the morning, and we saw how markets rallied until 10 a.m. and then it slowly started coming down. And there was one special thing that the RBI Governor Shaktikanta Das announced today, that is, retail investors can also invest in government securities. Now, let us understand these government securities and what we are calling right now as GSECs. So G hyphen SECS. So basically, these are something where the money is collected from the people and large investors, and the bonds are issued by the government. That is, the RBI issues it on behalf of the central government, and this is the one of the most safest way of investment in the country. So let me take you through a little bit of points that the Shaktikanta Das, the RBI governor, has made, and also give you a brief idea whether you should invest or not invest, and how it is going to be if the RBI is going to launch it. So RBI governor says that gilt securities accounts will be opened up, and this facility would be called as the Retail Direct, right? So it is the Retail Direct platform which will be given to you for you to go ahead and buy the government securities. Now, these gilt funds are nothing but they are debt funds that wherein the money is invested in government securities, right? Those are called as gilt funds, and this gilt word actually comes from the United Kingdom, and that is where the government securities, the way of issuing government securities, also started back then, back when the East India Company was actually ruling in parts of India, Africa, and other parts of Southeast Asia. So the East India Company wanted some money, and the government of UK also wanted some money. So that's when this government securities came up, and these guys were buying it with huge amounts, right? So these are debt instruments which are issued by the Reserve Bank of India on behalf of the central government. State government also issues it, and for that it is called as state development loans, right? And that these debt instruments have a tenure from 6 months to up to 40 years, right? So if you invest, the 6 months can be one type of maturity, and 40 years can be another type of maturity. And here in these debt instruments, interest is actually paid twice a year, and it is taxable at your income tax slab rates. And usually the very most famous government security is the 10-year government security bond yield, which basically is used to assess the long term interest rate in the economy, and it gives you the how what is the health of the economy, whether interest rates are high or whether interest rates are extremely low. So the current yield right now for this 10-year government security bond is 6.11%. The good part of government security bonds are they do not carry any credit risk. So if you invest your money, it's not, you're not going to lose any of your money. But there is one particular risk that is called as interest rate risk. So if the interest rates go up, the bond prices will considerably fall, right? So that is where you start making a little bit of losses in terms of the interest rate. So the in the present moment, that is even in the budget of 2021, Nirmala Sitharaman also announced that there is going to be a massive amount of borrowing from other financial institutions. So this massive borrowing actually leads to crashing or reducing the prices of the debt instruments, and this might lead for to fall in the prices of the debt instruments, right? So your yield will be extremely less if we compare it for the longer period of time, because of the given pandemic and the huge amount of borrowing, the amount of interest that you would be earning would actually be lesser than this 6.11% is what we can anticipate right now. In the last 3 years, ended February 4th, 2021, gilt mutual funds schemes these schemes that invest in government securities gave a 9.49% returns. That is the last 3 years, which ended on Feb 4th, 2021. But from now on, because of the pandemic and a massive borrowing that's going to happen, what we are seeing right now will not be same as expectation is there, right? So now, why have retail investors have ignored this government securities for a long time? And also RBI today morning, it told that it is going to give out these government securities to retail investors also. Now let's have a look at why did retail investors actually ignore this. The first and foremost thing is it is low risk and has extremely low returns. So anything which has low returns is extremely demotivating for the amount of money that you're making and trying to invest and getting returns from it in the long term, because inflation strikes and you cannot keep waiting for that particular maturity to happen for that same interest rate, because you already know what is the amount that you're going to get. So there are better options, that is fixed deposits and small savings schemes accounts, and also non-convertible debentures. Now, for example, the Power Finance Corporation issued a 10-year NCD, that is non-convertible debenture, at 7% coupon. But here, if you see, the government security is just 6.11%, right? So the Power Finance Corporation's NCD is much higher than the government securities. Now, poor liquidity in the secondary market, because there is no volumes in the exchanges. The volume comes up when there are a lot of people involved in buying government securities and selling it. But here, if we see, there is no much volume, and it is suffering from poor liquidity. Now there is a now even if somebody buys it, they have to transfer them to a constituent or subsidiary general ledger, which is called as CSGL account, and only then they can sell it. Until unless they don't transfer it to CSGL, they cannot sell it at all. Now, investors do not understand how CSGL account actually works. Now, conversion to CSGL format from the demat format actually takes 10 days. So, this entire time period and the way it operates is very demotivating for a retail investors. Who wants a quick buck and not keep wasting time on these G6, and that's why he doesn't invest in these kind of government securities. The lot size required to trade in government securities is almost 5 crore and above, right? So retail investor is someone who is like me and you, a common man who has about, like, let's say 5 lakhs or 10 lakhs. So we can invest that amount of money, but 5 crore is for somebody who has huge amount of money, somebody who earns good amount of rental income every month, has some business. So those kind of people, it is very easier for them. Now, if the RBI has to actually come up with this policy of giving retail investors a chance to invest in government securities, it has to alter all of these and give it in a format where the retail investor finds it very easy to invest and get some returns, similar to how we invest in recurring deposit and fixed deposits in the banks. Now, should you go for it? That's the biggest question, isn't it? Now, details are actually awaited from the RBI on how easy or tough is it going to be to buy the government securities directly or indirectly. Now, the key caution that I would give to you guys is the rising interest rates lead to a fall in bond prices, and because there is huge amount of borrowing that's happening right now from Asian Investment Bank, Infrastructure Investment Bank, and World Bank, and a lot of places where money is being taken for funding a lot of schemes in the country, the interest rates might increase and there would be fall in bond prices, and this might cause a capital loss if you sell it at that point, right? And lastly, watch out for the yields. They'll be among the lowest, since G securities do not carry credit risk. So if you are looking to invest in government securities, wait for the RBI's complete picture. And my biggest advice would be, as a as a normal person, as a friend, that I'm trying to tell, is if you have good amount of money and can wait for a very long time, because maturity period is huge, and you can invest some amount of money here and just chillax, and the rest of the money you can give it out to other debt instruments like the fixed deposit saving schemes, and also the stock market, isn't it? So I hope you had a very good session. You enjoyed learning a little bit of how government securities have been working and what are the problems in government securities. And if you like the video, please press the like button, and I hope to meet you with another video. Stay tuned. The next video would probably be about Bank Nifty, the movement today, that is 5th of February 2021. Thank you so much for being part of this video. Please subscribe to my channel and also press the like button. I hope you have a fantastic day. Thank you so much, guys.